Okay, so for today, we will proceed to the next lesson, which is all about loan receivable. Okay, so this is found on chapter 7 of your book. So a loan receivable is a financial asset arising from a loan granted by a bank or other financial institution to a borrower or a client. So the term of the loan may be short term, but in most cases, repayment periods cover several years. So how do we measure the loan receivable? So on initial measurement, during the first time that we record the transaction of the loan, so the loan will be measured at fair value plus transaction costs that are directly attributable to the acquisition of the financial asset. So what is this fair value? That is equivalent to the transaction price, which is the loan amount granted. Meanwhile, the transaction costs will include the direct origination costs, and these are directly attributable to the loan receivable. So direct origination costs should be included in the initial measurement of the loan receivable, but indirect origination costs are expensed when incurred. Subsequently, we are going to measure the loan receivable at amortized cost using the effective interest method. So this will be computed as the following items. So you have the initial measurement of the loan receivable, which is mentioned earlier. That's equivalent to fair value plus the transaction cost. That's the initial measurement. So you have minus any principal payments. So kung na ay gibayad ang atong client or atong customer pertaining to principals, we're going to deduct that, and then add or minus any cumulative amortization of any difference between the initial carrying amount and the principal maturity amount. So to determine if we're going to add the amortization or not, so it depends on the treatment here. So for example, if the initial amount recognized is less than the principal amount, so the amortization of the difference will be added to the carrying amount. But if the initial amount recognized is greater than the principal amount, so the amortization of the difference will be deducted from the carrying amount. So depende kung unsa man ang condition para mahibawaan na to kung i-add or i-deduct. So that would be the total amortized cost. Of course, the last item we need to consider is if in case there is impairment of the receivable, which will be discussed also later on in the next slide. So this is how you are going to compute the amortized cost. So in the absence of impairment, so kanirang tulo ang atong makonsider. Then we have the origination fees. So what are origination fees? So lending activities usually precede the actual disbursement of funds and generally include efforts to identify and attract potential borrowers and to originate the loan. So para mamugna ang loan, para mahitabo ang loan, so naatay mga efforts, and those efforts will entail payments or gasto, okay, or expenses. So origination fees are the fees charged by the bank against the borrower for the creation of the loan. Though this include compensation for the following activities such as evaluating the borrower's financial condition, so background check, then evaluating guarantees, collateral, and other security, negotiating terms of the loan, then preparing and processing the documents related to the loan, and closing and approving the loan transaction. So how do we account for the origination fees? So if the origination fees are received from the borrower, then it is recognized as unearned interest income and amortized over the term of the loan. So
Excuse
they,
me, sir.
yes,
Di ko kita sa imong slide nga gi-present, sir.
ay sorry.
Anak kay
Wala din ako na-share di ay sorry. Okay. So balikan ako. So what are origination fees? So these are fees charged by the bank against the borrower for the creation of the loan. So this would include compensation for the following activities. You have the evaluating of the borrower's financial condition, then evaluating guarantees, collateral, and other security, negotiating terms of the loan, preparing and processing the documents related to the loan, and closing and approving the loan transaction. So how do we account for origination fees? So origination fees received from the borrower, they are recognized as unearned interest income and are amortized over the term of the loan. So when we say amortize, so bahin-bahinon na siya according to the effective interest method. So mabahin-bahin siya over the term of the loan. We also have the direct origination costs. So this is a term referring to the origination fees that are not chargeable against the borrower. So here the direct origination costs are also deferred and are amortized over the term of the loan. So the same with the origination fees, i-amortized siya. So these are preferably offset directly against any unearned origination fees received. So pwede silang i-offset, so pwede silang ma-deduct from each other. So if the origination fees received exceed the direct origination cost, the difference is called as the unearned interest income. And the effect of the amortization of this unearned interest income is that it will increase the interest income. Kung opposite, if the origination fees received is lesser than the direct origination cost, the difference is charged to direct origination cost. So instead of an earned interest income, mauni siya ang iyahang account title or ma-charge siya to the direct origination cost. And the effect of the amortization of this one would be it will decrease the interest income. So, however, even if lahi sila og account or lahi sila nga items, both are still included in the measurement of the loan receivable. So, meaning, apil na siya sa pag-compute kung pila ang initial measurement. Again, they can be offset against each other. So, pwede na siyang ma-minus ang origination fees received from the direct origination costs incurred. So we have here an illustration. This is based on what is found in your book. So that's on Global Bank. Global Bank granted a loan to a borrower on January 1, 2020. The interest on the loan is 12% payable annually starting December 31, 2020, and it matures on 3 years on December 31, 2022. So the following are the details: the principal amount, origination fees received from the borrower, and the direct origination costs incurred. So what would be the initial carrying amount of the loan? It's equivalent to the principal minus origination fees received. So man siyang nadawat na gikan sa ato ang client. Okay? So meaning nakadawat na og money from the client. Mura bag natay gipa-reimburse nga portion sa ato ang mga nagasto. So that's why this is a deduction because it will reduce the cost of our loan, which is direct origination costs incurred. So ma-offset siya. Okay, so ma-offset, so meaning ma-minus siya from each other. So the initial carrying amount of the loan would be 4,768,000 200. Then on January 1, 2020, so the date wherein the loan was granted, the following would be the journal entries. So to record the loan, debit loan receivable 5 million and credit cash 5 million. Then to record the amount received from the borrower as origination fees received, so debit cash and unearned interest income. Remember that the origination fees received is recorded as unearned interest income and is amortized over the term of the loan. Okay, so credit ni siya ha. So di sila parehas. Next, you have to record the direct origination costs incurred by the bank. So debit unearned interest income and then credit cash. So instead of debiting that to the account title nga direct origination cost, adto na siya i-charge gihapon sa account title nga unearned interest income. So ang net unearned interest income for this one, so kung kaon na to ang difference, so that would be 231,800. Mao niyahang mahimong net nga unearned interest income kung ato silang i-offset. Kaya ma-offset man dyan na siya. Next is, using the effective interest method, this would be the content of our table. So you have the date of the transaction, January 1, 2020, and this is the carrying amount that we have computed earlier. And then interest received would be the same for every year. That is based on 12%. Okay? So that would be based on 12%. So that's 12% times 5 million. So that's 600,000 pesos. So that would be uniform for every year. Next is how do we compute the interest income? So since in the problem, the effective interest rate is not given, so we have to determine kung pila ang iyahang effective interest rate. So if in the problem it's not given, so makompute na nato siya, na may way on how to compute the effective interest rate. So let's go over to the problem. Okay, so because of the origination fees received and the direct origination costs, a new effective rate must be computed. So since the initial carrying amount of the loan receivable of 4,768,200 is lower than the principal amount, it means that there is a discount and therefore the effective rate must be higher than the nominal rate of 12%. So using the interpolation to determine here how much is the rate. So the effective interest rate is determined to be 14%. But for the illustration purposes, so let's just use the effective rate given in the problem. So 14%. So delete sa lang nato i-discuss unsaon pagkuha na siya. So in a different lesson lang na siya or different meeting. Okay, so 14% is our effective interest rate. Para asa man tong 14%, mao na i-multiply nimo ani sa carrying amount. Kay ang nominal rate nga 12%, kading nominal rate ani or the stated rate would be multiplied against the principal katong dili dili tong present value. So sa principal, so katong effective rate ani siya i-multiply aning present value. So let's check 4,768,200 times 14%, so that's 667,548. So ang difference ani nila kwaon nimo, so that would be your amortization. And how would you treat the amortization? So mo ni ang ato ang clue or ang hint kung unsaon na to ang amortization. Since ang ato ang present value kay 4,768, unya ang ato ang principal amount or the face value is 5 million, ang goal sa pag-amortize is to reach the face value. Especially if that would be if even if ano siya kung greater than or less than ang present value. So Since kaning ato ang carrying amount is lesser and then our goal is to reach 5 million, again, ang goal sa pag-amortize is to reach the face value or the principal amount. Unsa may buhaton para magparihas sila from 4,768,200 mahimo siyang 5 million. So kinahanglan siyang dugangan. So therefore, ang amortization nga naa diri should be added to the principal, not principal, should be added to the carrying amount, so that we will reach 5 million na principal. So therefore, 4,768,200 plus 67,548, that would be 4,835. So alam mo na to siya og add until ma-reach na to ang 5 million pesos. So that would be 4,835,748. Nga kanina sad, multiplyan na to adtong 14%, you will get 677,005. Get the difference, that would be 77,005. Again, our goal for amortizing is to reach the principal or the face value. So therefore, 77,005 would be added to 4,835,748. So that would be 4,912,753. Since last year naman, sa sunod nga tuig sa pag-amortize, so kuhaon na nato ang difference sa 5 million nga principal o ang 4,912,753. So, pila may difference nila? So, that would be 87,247. So, mo na siya, ano lang nato siya, i-work back lang siya. So, fill in the amounts for the balancing figure. Instead of multiplying 4,912,753 by 14%. Yun naman ang answer kung i-multiply nato di ay, ma'am. So, ang mahimo niyang answer would be 687,785. So, 687,785. Na kung i-minus nato sa 600,000, ang magawas nga answer is 87,785. Nya kung i-add na nato diri ang 87,785, mulapas man siya og 5 million. So, mao na siya nga, ang balancing figure lang atong adjusting nga amount diri. Okay, so what would be the journal entries on December 31? So, we will receive cash for the interest of 600,000. Mao na ka, ma'am, ang loan kay mo mature man siya 3 years. So, ang kaning mo mature 3 years after would be the principal. But the interest man is annual, so that's why we will receive cash every year for the interest. So, debit cash, 600,000. Then, credit interest income, 600,000. Then, for the unearned interest income, so 'di ba dili na naman nato makita ang origination fees, direct origination cost because naka-embedded na siya ani unearned interest income. So you have unearned interest income 67,548 and credit interest income. So kaning naa diri nga kolom mao ni butang nimo ani nga entry for the amortization. So if you will be asked with a question, how much is the interest received? So ang answer na niya is 600,000. If you're asked, how much is the interest income? And then the answer would be, sa my answer, 667,548. Okay? So, yun sa man na siya pagkuha, ma'am. So, pwedeng base sa table or pwede po siya based on the journal entry. So, tanawa ning interest income na credit is 600,000. And then, ang credit po sa interest income here nga 67,548. So, ang total kay 667,548. So what would be the statement presentation on December 31, 2020? So you have the loan receivable, which is the principal amount of 5 million. And then we have the unearned interest income. So 231,800 minus 67,548. This amaning 231,800 ma'am. So remember katong origination fees, diba this is a deduction. And then the direct origination cost ng 100. So kung paano mo ang iyang net difference, that would be net of negative 231,800. That's why kaning unearned interest income diri is a deduction. Kay mas labaw maning negative ani kumpara ani nga positive. So negative 231,800 mo na siya nga 231,800 ni. Isa gikan ning 67,548 gikan na siya aning gi-amortize. Remember katong entry nato previously, diba? Ang unearned interest income gi-debit. So makuan. So ang balance niya is 164,252. So the carrying amount of the receivable would be loan receivable would be 4,835,748. Next, the journal entries on December 31, 2021. Okay, the following year. So again, debit cash, credit interest income, and then for the amortization, debit and earned interest income and credit interest income. Then what will be the journal entries on December 31, 2022? Debit cash, credit interest income, then amortization. I remember this is the balancing figure to make it 5 million. And then credit interest income, 87,245. And finally, we're going to collect the principal after 3 years to debit cash, credit, loan, receivable. So again, if you're asking the problem, what is the interest income in 2021? The answer would be kanisiya 677,005 or pwede ka mo tan-aw diri sa ato ang table na we have here 677,005. Okay, so the next would be on the impairment of the loan. So accordingly, there would be credit losses as a result of the loan receivable. So PFRS 9 provides that an entity shall recognize a loss allowance for expected credit losses on financial asset measured at amortized cost. Remember the measurement for the loan receivable, diba? Subsequently, it will be measured at amortized cost. In addition, an entity shall measure the allowance for financial instrument at an amount equal to the lifetime expected credit losses if the credit risk on that financial instrument has increased significantly since initial recognition. We have to take note that credit losses would be equal to the present value of all cash shortfalls, while expected credit losses is equivalent to the estimate of credit losses over the life of the financial asset. So how do we measure the impairment? So in measuring the expected credit losses, an entity should consider the probability weighted outcome. So the estimate should reflect the possibility that a credit loss occurs and possibility that no credit loss occurs. Or we can use the time value of money wherein the expected credit losses would be discounted. And we have the reasonable, supportable information that is available without undue cost or effort. Sorry, this is cost or effort. So PFRS 9 does not prescribe particular method of measuring credit losses. And the amount of impairment loss would be equivalent to the carrying amount minus the present value of estimated future cash flows discounted at original effective rate. Then here, credit risk is defined as the risk that one party to a financial instrument will cause a financial loss for the other party by failing to discharge an obligation. This risk does not necessarily relate to the creditworthiness of the issuer. For example, if an entity issued a collateralized liability, meaning the liability has a collateral na siya security, nangutang siya, niya iyahang gi-offer ang yuta as collateral, so that's collateralized. Kung wala siya gi-offer nga security, wala siya gi-pledge nga assets, then it's non-collateralized. So again, if an entity issued a collateralized liability and non-collateralized liability that are otherwise identical, the credit risk of the two liabilities would be different. The credit risk of the collateralized liability would be lesser than the credit risk of the non-collateralized liability. Of course, because if naa siya collateral, na may ma-offer in case dili ka bayad ang atoang client. So, since na may ma-offer, so ang atoang credit risk would be low. Or for the collateralized liability, that would be zero compared kung ang utang is walay collateral. So we have here an illustration to properly picture out what is impairment. So this is based on the problem found on your book. That's International Bank. So International Bank loaned 5 million to bank card company on January 1, 2018. The terms of the loan require principal payment of 1 million each year for 5 years plus 10%. The first principal and interest payment is due on December 31, 2018. Bank card company made the required payments on December 31, 2018 and December 31, 2019. So that's for 2 years. However, during 2020, the bank card company began to experience financial difficulties and was unable to make the required principal and interest payment on December 31, 2020. So therefore, duha ra ka tuig yan nabayaran, pagka third year wala na siya kabayad. On December 31, 2020, International Bank assessed the collectability of the loan and has determined that the remaining principal payments will be collected, ang principal lang, but the collection of the interest is unlikely. The loan receivable has carrying amount of 3.3 million, including accrued interest of 300,000 on December 31, 2020. And the following are the projected cash flows. So, kung i-total ni silang tulo, this is equivalent to 3 million, which is the balance of the 5 million nga loan minus 2 years nga nagbayad og principal nga 1 million and then another is 1 million. So, ang balance is 3 million. So, ang pagbayad sa utang would be in the next 3 years at the following amounts. And the carrying amount of the loan is 3.3 million, which includes the accrued interest. So what will be the present value of the cash flows? So we can use the interest rate, the original effective rate of 10% and get the present value factor. So you already know how to get the present value factor. So diba, that's 1.1 or 1 plus 10% divide, then equals 1, 2, 3, 4, 5. Sakto ba? Dili. This is only for one period. One period, second period, and then third period. So 1.10 divided by 1. So that's 0.9091. And then another equal. So that is 0.826446. Then press again equals to 0.7513. Okay. So multiply the present value factors by the cash flows for every year. Then the total would be 2,407,900. Next is compute the impairment loss. So to compute the impairment loss, again, that's the difference between the carrying amount and the present value of the future cash flows using the effective interest rate. So the carrying amount of the loan, which is given here, 3,300,000 plus the present value of the cash flows computed here. So our impairment loss is 892,100. Okay, so the entries for December 31, 2020 would be loan impairment loss, 892,100 computed here. Credit accrued interest receivable, 300,000. So this is coming from the accrued interest ani. Then allowance for loan impairment, 592,100. Ngano na may accrued interest, ma'am? So these are for interests that were not paid. So pag first and second payments na kakomply man sila, but on the third year, this is the amount of the accrued interest, which would be equivalent to 10% of the remaining amount nga 3 million, so 300,000. Then for the statement presentation on December 31, 2020, this is how you're going to present this. So loan receivable, 3 million. This is the remaining amount nga wala pa nabayaran. Then allowance for loan impairment, so the carrying amount is 2,407,900. So if pangutan-on, how much is the carrying amount of the loan as of December 31, 2020? The answer would be not 3,300,000 but 2,407,900, which is equivalent to the present value of the cash flows or present value of the future cash flows using the effective interest rate. Okay, so therefore, ang ato ang carrying amount nga 3,300,000 ato siyang gi-bring down to the present value. So dapat ang mo-appear sa ato ang statement ug sa atong records that the loan is now valued at 2,407,900. Then for 2021, the following would be the journal entries to record the collection. So the first payment is 500,000. Then credit loan receivable, 500,000 for the payment of the principal. Then record the interest using effective interest method. So debit allowance for loan impairment and credit interest income. So how do we get that? That would be 10% of the previous carrying amount. Remember, ang carrying amount nato is 2,407,900 as of December 31, 2020. For 2022, the following would be the journal entries to record the collection of cash, debit cash, credit loan receivable, that is for the 2022 projected cash flows. Then to record the interest income, debit allowance for loan impairment, and credit interest income. So how do we compute this one? So get the carrying amount. So the carrying amount would be as follows. The loan receivable would be 2,500,000. Nganong 2,500,000 na siya, di ba? Ang 3 million, gibayaran na nato ang 500,000 or padisad, i-add mo tong remaining receivable, 1 million plus 1,500,000. So that would be 2,500,000. And then deduct the allowance for loan impairment. So that's from 592,100. So that's 592,100 minus ang atuan ng na-amortize na 240,790. So the balance is 351,310. So the carrying amount would be 2,148,690 multiplied by 10% original effective rate. So the interest income for 2022 is 214,869. For 2023, to record the cash collection with debit cash and credit loan receivable. Then to record the interest income using the effective interest method, that would be debit to allowance for loan impairment and then credit interest income. That's 136,441. So how do we get this one? So the loan receivable remaining is 1,500,000 as of 2022. Then we have the allowance for loan impairment would be 136,441. So, yun sa man siya pagkuha. Diba, ang previous na to nga balance kay 351,310 and na naman tayo recognize nga 214,869 pag niagi. So, pila na may balance? So, that would be 136,441. But if we want to check if really mao gini siya dapat ang interest income, pwede natong kaon ng carrying amount and multiply it by 10. So that would be 136,356. And there would be a difference of 85 due to the rounding off of the present value factors, which is what we did, diba? Multiply man nato siya tagsa-tagsa katong future cash flows. Okay? So that would be the end of the lesson for today. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.